Today's guest is Darel Dyke. Darel Dyke has been in business for 22 years. I think that alone is a feat in itself. So 2008, I want to talk about 2008 because you're one of the few people that I've interviewed here that actually went through that. Let's talk about how that dynamic was, right? It was a bull run leading up to 2008, right? Everyone's like, bam, 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 go, 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 loans, deals, everything. 2008, walk us through it. What happened?
The market just tanked. A lot of loans went bad. People weren't buying houses anymore. I would have customers just walk in and here's the keys to 10 houses. I can't do it anymore. So that's what I did. So whatever I couldn't sell, I kept. And so at one point I had probably like 20, 25 different houses that I had either rented or owned or financed because I would have got killed on them. Now I remember I had houses that I had a $50,000 loan on and I couldn't give them away for 30.
Wow.
So it was very stressful. I was married at the time. I had 2 small children at home. My wife didn't work. So I had the pressure on me big time. After 08 and 09 wasn't better either. We also had a hurricane come in, Hurricane Ike. We had a big freeze. And so all these houses that I was juggling and I had rehabbed, a lot of them got damaged. And I'm like,
Damn.
they were already done. They were finished. And I go out there and I walk up to the door and I look and there's water running. And I'm like, this is not good. You know, open the door and water just whoosh.
Yeah.
Very stressful. But, I learned a lot. I always say I learned more in those 2 years than I have in 22. I don't want to do it again.
No.
But you learn so much when you're struggling.
There's a ton of hard money lenders here in Houston, seeing a lot of people come and go. But what has made you different? What has led you to be successful when a lot of others have came and gone?
I think...
Welcome to another episode of Pick Up the Phone podcast. I am your host, Josue Llanas. I am the CEO of Vancom. We help people with marketing, sales, and artificial intelligence. Today's guest is Darel Dyke. Darel Dyke has been in business for 22 years, so I think that alone is a feat in itself. Can't wait to talk a lot about that. His mortgage company has 14 employees. And one of the biggest qualities that I think you mentioned earlier was that you develop a lot of people. And so I'd really love to dive into that. And then I think, Darel, one of the most important things that I see you do is you host an event every year and you have 500 professional people in a room. So how do you do all that?
Lots of marketing and lots of people referring people over. But, we try to bring value. We do a lot of events, but our biggest one is in January.
Yeah.
And it's a forecast event. So we bring in a group of professionals to talk about, what are they seeing, coming in the next 12 months.
Yeah.
And so it's a good topic to have in January. And there's a lot of forecasts out there. And, forecasts are worth the dime a dozen, as you know. Everybody has their own opinion of it, but it's a good way we bring in like local investors and chair of HAR comes in and just people that actually have boots on the ground that are seeing deals, not, some economist that's been sitting in a desk and, teaching people at the University of Texas or something. These are people that are actually doing deals.
Yeah.
So I think it brings a lot of value. I think that's why we've been able to get such a high attendance to it.
Yeah. I definitely see it consistently be one of the biggest events in town that people look forward to at the beginning of the year. Especially because it's at the beginning of the year, people are always excited to go to that event, see what kind of people you bring onto the panel, and a lot of people up there are actually bringing a lot of actionable value to the marketplace.
Yeah, absolutely, and that's the goal, right?
Yeah,
it's easy to go up there and stand and tell everybody how great you are and send me business and all that, but I don't get people like that. I bring people in that are actually be vulnerable and talk about their experience and what they're expecting and what maybe they're targeting for investments this year and so forth.
Yeah. I love that. Well, Darel, let's start from the beginning, man. Let's talk a little bit about you and your story. How did you get started? You've been in business for 22 years, man. So one question that I like to ask everyone is, when did you know that you wanted to be an entrepreneur?
I don't think I ever did. I think I'm an accidental entrepreneur. I started off right out of college, thought I wanted to be a stockbroker and so forth. That didn't pan out. And I got a job at a hard money company as a loan officer. And, I always tell people the same story, and I don't mean this in an arrogant way, but if you ever hear the story about Mozart, he's 3 years old, they put him in front of a piano and he just knew how to play.
Yeah.
And that's how I felt on the loan side. It just felt right. It felt very comfortable. I just knew how to close loans and knew how to underwrite them and so forth. So right off the bat, when I started, I was still a bartender at night.
Really?
I was bartending because I wasn't making money as a stockbroker.
Yeah.
The market had just tanked. And so I got a job as a loan officer. I was still bartending at night. And then after a couple months, I was like, shit, I don't need to, bartend anymore. I was making money now. So
Yeah.
it just felt right. And so that's how I got my start in the industry. But, the first guy I worked for, at first he was doing very well and doing the right things. And then greed took over. And I saw it on the wall before I left and before he ended up going bankrupt. And so about a year before they went bankrupt, I was like, I can't be around this. Not the right thing to do here.
Yeah.
I just felt like he was going to fail, and I felt like he was going to people were going to get screwed in the process, raising money, and that's exactly what happened. And so I was like, if I'm going to do this, I'll just do it right. So in my mind, I'm thinking, okay, I'm already 100% commission. I'll just do my own business, and that's what a lot of people think. I'm 100% commission already. I'll just start my business.
Yeah.
And what a lot of people don't realize is that's just sales.
Right.
Sales is one aspect of owning a business. And so it was a huge learning curve for me because then you have to incorporate, hiring people, HR and managing people, your finances and accounting and marketing and IT. Like all of a sudden you're like doing all these things and you didn't realize that. You're like, I just want to sell and do loans.
Yeah.
But you didn't realize all these other things are going to happen. So that's really how I got into Noble. It's just I wanted to do things the right way. Stay in that industry, but I don't want to be associated with someone that was, starting to go down the wrong path. And so I was like, I'm just going to do this myself.
So that's how you got started.
That's how I started Noble.
Wow.
I subleased some office space from another guy that was a hard money lender here that I had a relationship with.
Yeah.
And he was an older guy, and you can take that office back there type of deal. And he kind of helped me, mentored me a little bit early on.
Wow.
Even though I would eventually be a competitor of his, but he had been in it so long, so that helped me out a lot as well.
That's incredible.
Yeah.
Yeah. So are you originally from Houston?
Born in Indiana, but I've lived here since I was 4. So yeah, I claim Houston as my home.
Nice. So you and your family came over here when you were 4 years old?
Yep.
Went to school here and everything?
Yep. Grew up in Sugarland, went to Sugarland Junior High, Clements High School.
Nice. Okay. Yep. So native Houstonian at this point.
Pretty much, yeah. Pretty much.
So started Noble right after college. You were bartending at night, and then after a while, how long were you working for someone before you decided to, okay, this guy's doing something shady, let me go do my own thing?
I think it was about 5 years.
Okay.
Most of that time, the company was good. I didn't feel like there was anything shady going on, but they started to grow very, very rapidly and get into doing large commercial deals because they were able to raise money so fast. But these commercial deals I was just, and this doesn't look like a deal that's going to work in the end. And that was eventually their downfall.
Got it. So basically wrote a bunch of bad loans.
Made a bunch of bad loans, had raised money from investors, and then a lot of those investors lost their money eventually when everybody figured out what was going on.
Yeah. And that's tough.
Yeah.
So 5 years you're working for this guy. You're probably like around 26, 27 years old, probably when you started Noble?
I was older than that. I think I was like maybe 29 or 30.
Yeah.
29 or 30, something like that.
Nice. So when you started Noble, how long did it take you to start building up Noble and then maybe started hiring people? How long did that take?
Really in the first 12 months, I started hiring a few people and I didn't know what I was doing, honestly. I knew a lot of people in the industry and they're like, hey, can I hang my mortgage license with you as a loan officer? I'm like, yeah, sure. I'm thinking, okay, more business. Hey, and so I hired like 2-3 people that were originators and then eventually hired, some admin and so forth. Without any type of knowledge in what culture is in a company. And then before long, we had, 15, 18 people there, and it was just a lot of bickering and just, a little bit of drama here and there. And I was just like, this is annoying. I didn't really enjoy it that much.
Right.
But I didn't have a concept of what culture was. And so, after the market crashed in '08, everybody pretty much ran for the hills. We were able to survive the Great Recession, but I went down to 3 employees. Me and 2 other people at one point, just trying to like get out of these foreclosures and keep the doors open.
Yeah.
And so when I did start rehiring and building, I hired a business coach, and that made a huge impact on me. The first thing he talked about was culture,
right?
And hiring the people that that fit in the right seat and also get along with your personality style. And that was a game changer. And ever since then, I've never had any drama. People stick around longer and so forth. And it's been a big part of how much I enjoy owning a business because I'm that guy that likes going to work on Monday. I miss my team. I'm like, hey, what'd you guys do this weekend?
Yeah, that's amazing. So let's talk a little bit about that then. You hired a business coach. What did he tell you that you had to do to be able to build the culture in your company?
Well, the first thing he taught me was to delegate. I was doing everything. I was doing all my accounting, and I didn't mind it because I'm good at numbers. I'm a math guy. And, I was doing the marketing. Someone has a problem with their computer. Oh yeah, I can fix that. I'll be the IT guy. And he was like, I remember he's like, why are you doing your own accounting? And I was like, I enjoy it.
Yeah.
I like coming to zero.
Yeah.
I balance the books, come to zero. And he's like, how much would it cost you to hire an accountant? And at the time, I think I said like, $50,000.
Yeah.
And he's like, how much do you make? And I was like, more than $50,000. And he's like, you're losing money by not doing that. And so he really got me out of my head to start delegating. And then, with culture, it's a matter of, that was when I was exposed to personality assessments. I'm a big personality assessment.
Which one do you like?
I use DISC.
DISC. Okay,
DISC, and there's a lot of them out there, obviously. But
Yeah.
I got certified to teach DISC. It's one of my CE classes.
Nice.
And when you hire people, you need to know that information. It's very valuable. You know, not only their skill set, but what their natural personality is.
High D, high I, high S, I see.
Exactly, all that stuff.
Yeah.
And so that helped me just understanding DISC, finding the right people that would fit our culture. I spent a lot of time interviewing them. Like they say, hire slowly, fire quickly. I interview them at least 2-3 times, and I have 2 or 3 other team members interview them. And my first question is, do you like them? Do you like this? Can you see yourself spending every day with them? Because you think about it, you spend more time with your team members than you do with your own family.
Sometimes, yeah.
So my first thing is, do I like this person? Do I think they fit in with our culture? Because we're laid back, we have fun, everybody jokes around. There's cussing involved at my office. I'll cuss in the interview. Like I will drop not like an F-bomb, but I will cuss a little bit in the interview and just look at them.
See what they say, see how they act.
If they flinch or they get like, oh God,
Yeah.
I'm like, I don't think you're going to work here.
Not the right fit.
And that's not the right fit for them either, right?
Right.
So I make sure so we spend a lot of time interviewing them to make sure they're going to fit the culture and make sure other people have talked to them. They're like, yeah, I like that person. Like they'd be a good fit.
Nice. So I think what it really boils down to is during the interviews to really kind of iron out what person's really going to fit your dynamic in your company versus someone that is or isn't going to fit. You do it all during the interview?
Yeah, I try to. I mean, I go with the cultural fit first, attitude second, and skill set third. Because if they have the perfect skill set, but they have a bad attitude, that's a no-go,
Right.
Or if they don't have the right personality assessment, if it's someone who's back office doing accounting or something that's very like, you have to be very specific and you have to be correct or it can screw up a lot of things. I want a high C.
Right.
High C's are very detail-oriented.
Right.
I love C's. All my back office are C's.
Right.
And they rarely make mistakes.
Right.
Because a mistake with an admin, even though it's something very tedious and it's not difficult to do, but it can have lots of ramifications, whether it's accounting or loan servicing and so forth. So I try to hire C's in the back office.
Detail-oriented people.
Absolutely.
Yeah. And I think that's really important because for the most part, a lot of business or maybe new business owners are just looking at the resume and what that person can bring to the table versus noticing those very important key traits like attitude, right? Like attitude and their personality. I use one called Culture Index.
Okay.
And that one is like DISC on steroids. It has the 4, DISC, and then it has like another one that ranges that on like a statistical basis across the entire human population or people that have taken the survey. It's got like 9 different factors in it. So I'll show you later.
Yeah, there's ones. I mean, DISC is probably the simplest form of personality assessments, but that's why I like it.
Right.
Because I can have someone come in for an interview, and hey, can you take this assessment? And they're done in 20 minutes.
Yeah.
And that one's probably a lot more labor intensive. Like, how long does it take them to get through it?
Normally, I think it normally takes about 15 minutes. Too.
Really?
Yeah.
That's interesting.
Yeah, it's literally just a bunch of words that they choose, and then based on the clicks on the screen, it'll determine how you're hardwired.
Interesting.
Based on the words that you choose on the screen. So it's very.
You have
very
to send
simple.
it to me. I want to check it out.
Yeah,
I love that. I love that kind of stuff.
Yeah, me too. I hire and fire a bunch of people like overseas, right? So one of my biggest indicators to determine if someone is a good fit for a position or not is that personality profile. So we pay like $13,000 a year for it. So it's a big component of our business.
That's really cool. Yeah, I think personality assessment is super important in any type of relationship, even if you're dating somebody. Like whenever I start dating someone new, hey, can you take this assessment? I do that every single time. And they're like, what is this? I'm like, just
take it. Yeah.
And then we'll go to dinner afterwards.
It's just a little fun game that we want to play. Go ahead and take this right here.
Yeah.
Man, that's great. So you're 2008. I want to talk about 2008 because you're one of the few people that I've interviewed here that actually went through that. So let's talk about how that dynamic was, right? It was a bull run leading up to 2008, right? Everyone's like, bam, 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 go, 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 loans, deals, everything, right?
Yep.
2008. Walk us through it. What happened?
Well, what's funny is we were talking about economic forecast earlier, and I remember in the fall of 07, everybody was kind of starting to get worried, like, it's something going to happen.
Yeah.
And I went to this economic forecast, and the guy said he predicted a soft landing in 2008, and I will never forget that. And so, the market just tanked, and the market tanked. A lot of loans went bad. People weren't buying houses anymore. People were just, I would have customers just walk in and, here's the keys to 10 houses. I can't do it anymore. Because we had a lot of, and we still do, we have like over 60% of my business is repeat customers. And a lot of these customers would have 5, 10, 15 loans with me. Yeah. I had a guy come in, give me 10 sets of keys. And it's like, I can't do it anymore.
During 08?
Yeah. And nobody was buying houses. So it was very capital intensive for anybody that was in the hard money side, because you're foreclosing on homes. That's capital there. When you take the homes back, people always think hard money lenders, can't wait to foreclose. I hate foreclosure. I want to lend money and get paid back. Mm-hmm. I'm not in the business of rehabbing houses. But now I got to put my Mr. Contractor hat on, or Mr., if I can owner finance it, or if I can rent it out and be a landlord. And so it really forced me to get extremely creative on how to keep cash flow coming.
Yeah.
I try to sell it. There's no one buying houses. Okay, I'll owner finance it. No one wants to buy it as an owner finance. Okay, then maybe I'll rent it. So that's what I did. So whatever I couldn't sell, I kept.
Yeah.
And so at one point I had probably like 20, 25 different houses that I had either rented or owner finance, because I would have got killed on them.
Right.
I remember I had houses that I had a $50,000 loan on, and I couldn't give them away for 30.
Wow.
And I'm like,
houses.
I'm like, I'm not taking that loss.
Right.
So I'll stick a tenant in them, held. They always say, if you can't get your price in real estate, just wait.
Yeah.
Just wait and it'll come back. And sure enough, it came back.
Yeah.
And so it was very stressful, because it was, I was married at the time. I had 2 small children at home. My wife didn't work. So I was, had the pressure on me big time. Yeah. And then we had, after 08 and 09 wasn't better either. We also had a hurricane come in, Hurricane Ike. We had a big freeze. And so all these houses that I was juggling and I had rehabbed, a lot of them got damaged. And I'm like, gosh, I know.
Damn.
I know. I remember I had 2, and they were in Angleton.
Yeah.
And I kept avoiding going out there and check on them during a freeze, because like they were kind of far away, but they were already done. They were finished. And I go out there and I walk up to the door and I look, and there's water running.
Oh,
and I'm like,
no,
this is not good.
No.
Open the door and water just whoosh.
Yeah. So
very stressful. But I learned a lot.
Yeah.
I always say I learned more in those 2 years than I have in 22.
Wow.
And that's the truth. Now, I don't want to do it again.
No.
But you learn so much when you're struggling.
Well, let's talk about that, man. What was the biggest lessons that you learned those 2 years?
I think I definitely needed to tighten up my underwriting quite a bit. Be a lot more careful about which neighborhoods we were lending in, because when you do foreclose, you're not getting back the houses that you're like, okay, I'll be fine on this house. You're getting houses in very, very, rough neighborhoods.
Right.
And so that makes it even more difficult, to find contractors that are willing to go out there and actually repair them. And then, no one's buying houses in those neighborhoods. And okay, now I'll rent it. Well, guess who my tenant is? The people that live in those neighborhoods.
Yeah.
That was tough. I would send contractors out and they would come back like, yeah, I'm not going back out there again.
Wow.
Someone, broke into my truck and stole a bunch of my tools. And I'm like, so that was very, very difficult. And so just being a little more careful about who our customers are, where they're buying their houses at. That was a big lesson I had to learn at the time.
So not necessarily picking your borrowers better, but making sure that they're buying in good areas, or not complete terrible.
And if they are buying in a rough area, okay, then they better be well capitalized. Like I'll still do a loan in a rough area. Ideally, they're going to keep it as a rental. So they're going to buy it and fix it, and then we'll arrange a long-term loan.
Yeah.
If they're flipping a house in a rough area, they better have good capital. good cash reserves to make me feel comfortable. Because, bad borrower in a bad area, like I'll do loans to people that have, I'm doing a loan for a guy right now. He's like a 480 credit score. I'll do that loan, but it better be a really nice area, you know, and you better have a lot of cash reserves. And this guy does.
Yeah.
He's got like a 480 credit score, but he's got like 300 grand in the bank.
Oh yeah.
And he's got a nice house he's buying. I'm like, okay, I'll do that deal.
Yeah.
Now, if he was buying in a rough area that I wouldn't feel comfortable driving at, I wouldn't do that loan.
Right. Okay. So how do you determine now whether you're going to write a loan for someone?
Just have instincts about it, like I said, like I just know how to play, and I've been doing it long enough. And, sometimes I'll still go look at the house in person.
More importantly, how do you teach that to someone? How do you teach that instinct of knowing whether to write a loan or not?
It's tough. I've had people that have worked for me for a long time and they still disagree with me on certain things. And I'm like, this is why I make the decisions, buddy.
This is why I'm the owner.
Yeah. I mean, I've always had really good lending instincts, and I'm not saying I'm perfect, and I've made loans that have gone bad, and maybe I've missed opportunities, but at the end of the day, it's me who has to sleep with it, right? The deal goes bad, I have to take the property back. I have to write the checks. I got to figure out all this stuff. So, until you're ready to sit in that seat, then I don't want to hear anything. I mean, I'll listen to you, but I mean, if I've made my decision, I made my decision. Unless there's a compensating factor.
Of course.
I'm really good at structuring deals. So if there's a way to get the deal done, like if I'm not quite comfortable, I'm like, wait a minute. Maybe we can help him negotiate a lower price, or maybe does he have another property that's paid off and we can cross collateralize? So I'll think outside the box to try to make that. I've even talked to a seller before and got him to take a seller's second. He wanted to sell, he inherited it. I'm like, why don't you ask him for a second? And they're like, he's not going to do that. I'm like, have you asked?
Right.
And they're like, no. And I said, well, ask. Well, and I don't think, I said, do you want me to call him? Yeah, I called him and he took a $50,000 second. We got the deal closed. So, I mean, I'm very much, not a deal
oriented.
Not a deal killer. I'm there to make the deal work. If there's a deal to be had, I try to figure out a way to make it work.
Right. I think one of your biggest like character traits is that like you have like a very educative, very easygoing mindset in terms of being able to walk through something complicated like a deal, right? And so I think that for any new flipper that's out there that's maybe like looking at flipping a deal and needs some sort of guidance, I feel like you have like that sort of energy that can like you'll be able to guide them very well throughout a process like that, right?
Yeah, we obviously worked with a lot of beginners over the years and professionals, but like the saying goes, right? If you can't teach it to a child, then you don't understand it yourself.
Right.
Because when you are teaching to new investors, I've been doing this over 20 years.
Yeah.
It could be very easy for me to just talk over their head, and you're not accomplishing anything. You want to speak to them in a way that they understand. Everybody understands things differently. So I try to make it very simple.
Yeah. Out of all your business, how many would you say are like you're getting like new investors versus people that you've been doing business with?
I think I want to say it's like 70% repeat customers.
Really?
Yeah, 70%.
Oh.
And a lot of those customers are people that are doing several deals.
Right.
That typically that's the great thing about investment real estate. They don't just buy one house.
Yeah.
They get their feet wet with one, and next thing you know, they might stop at 5, they might stop at 50, they might never stop.
Right.
That's the part I love about that business. It's not like they buy a house every 7 years to live in. These are people that are building, a lot of net worth for their families and themselves. So they're going to keep buying over the year.
Dude, that's awesome. Yeah. Do you have like any sort of like educational classes or like resources for borrowers in your company?
Yeah, we teach classes all the time. I've always been big on education.
Yeah.
I have 4 different classes that I teach that are CE credited for realtors, but you don't have to be a realtor to go. 3 of them are investment based as far as like buying houses, rather flipping or even as a rental. And then I also teach the DISC class, the personality assessment.
Oh, yeah.
Which is great for realtors and really anybody, but realtors especially because they're dealing with so many different personalities.
Yeah.
And so it's understanding their personality. And, what's helpful is obviously you can read other people's personalities and then change your own to speak to them in a way that better communicates to them.
Yeah. I think earlier you mentioned you had some sort of class for teenagers.
Yes.
Yeah. Let's talk about that.
Yeah, that's a cool class. We started doing it, I want to say in 2016 maybe. And it just happened organically. One of my investors came to me and he's like, hey, would you mind spending some time with my son to talk about real estate? He said, I think he's interested, but he doesn't really listen to me, like all kids, right?
Yeah.
And I said, yeah, of course. I'd be happy to sit down and visit with them. And then I was thinking about it, and I was like, I bet there's a lot of other realtors or investors that would like to expose their kids to real estate. So we said, let's do a class. So we started this class. It's real estate for teens. They have to be 13 or older. And I want to say it was 2016, and we do it once a year. Everybody always like, oh, can you do that? More times a year, but it's a lot of work. It's a lot of work to put that thing on. But it's really rewarding. And so we've been doing that every year, and we get anywhere between 80 and 150 kids. And what's shocking is these kids, most of them have parents that are in real estate. They are asking brilliant questions.
Really?
Sometimes better than my adults. But, like parents think they're not listening. I'm like, they are listening. They're just not, you just don't think they're listening. But they're asking very intelligent questions. And, now I've run into 2 or 3 of them at my regular networking events. And they're like, hey, I went to your teen class and, 8 years ago or 5 years ago. Hilarious. And now they're in real estate. I'm like, that's really cool. I love that.
Yeah. Played a part in their success.
Yeah, absolutely. Yeah. Really cool.
Man, that's amazing. What has made you successful in business?
And I always come back to grit.
Yeah.
I always come back to grit, because when things get rough, it all comes down to you, just like we were talking about earlier. You're a business owner, you're kind of on an island. So you've got to lead and figure it out. And that's what I've always been blessed with, is just the grit to do that. And when you have, again, in 2008 and 2009, I had a wife and 2 kids at home. That doesn't motivate you. I don't know what will.
Yeah.
So I've always had a good amount of grit, being able to solve problems, and just being very, have an abundant mindset. I've always been a big person on abundant mindset. If I can help people in any way, and even if it's my competitors, I always try to be friendly with my competitors, because, it's important to network with your peers. As soon as there's a new hard money lender in Houston, when I run into them, I always tell them the same thing. I say, look, if you come across a deal and it's a appraisal that we did an appraisal, it's delivered to Nobel Mortgage, and you're wondering why I didn't do that loan, call me, I'll tell you.
Yeah.
I don't want you to get burned on a deal. And I've had that happen several times. And I'm like, that guy created fraudulent bank statements or something, so don't lend to that guy. And vice versa. I want to be able to call them. Hey, I got this appraisal.
Yeah.
Why didn't you do this deal? Is there something weird going on here that I need to know about? And so I think abundant mentality is a huge thing when you're a business owner, to help people, because I think it comes back.
You harped on a very important topic here also. There's a ton of hard money lenders here in Houston, right?
Yes.
And so you've been in business 22 years, so you've obviously, seen a lot of people come and go. But what has made you different, and what has led you to be successful when, a lot of others have came and gone?
I think we're very consistent at Nobel Mortgage. I've been very blessed to have team members that have stayed with me for a long time. You've met Chris that works for me.
Yeah.
Chris and I were waiters in a restaurant when I met him in college. And he's worked for me for 21 years.
Wow.
And Lindsay's now worked for me for, I think, 6 years. Jesse's worked for me for 6 years. So when you can keep people around a lot longer, and they drink the Kool-Aid, I'm always like, you got to drink the Nobel Mortgage Kool-Aid. It helps you deliver consistency and good customer service.
Yeah.
And everybody talks about customer service, but we take it really seriously. Like, I'm very laid back at work. As you can tell, I'm a laid back person.
Yeah.
But I don't play when it comes to customer service. We have over 500 Google reviews, and every single one of them is 5 stars.
Yeah, for 500?
Over 500,
Holy
and they're all
cow.
5 stars. And so that says a lot about my team.
Yeah.
Not to say that we've never disappointed somebody or made a mistake, but I always tell my team, look, if you make a mistake, figure out how to fix it, then call them and say, I screwed up.
Yeah.
Here's what I'm going to do to fix it.
Exactly.
And I think people appreciate that.
Absolutely.
Everybody makes mistakes.
Right.
It's the people that don't take accountability, that just make excuses, that you're like, okay, this guy, I got to move on. So
Screw this guy. Yeah.
That's been a huge part of our success, is making sure we take care of everybody.
Wow. How long did it take you to get that many reviews?
I don't know. Google hasn't been around, but what? Google wasn't really a big thing until probably 2017 or 18.
Yeah.
I was just reading an article about, Internet Explorer was the big thing before Google took over.
Right.
And Google wasn't really a search browser until like 15. I think they just started to get into it. So it was probably like 2017, 18 that we kind of started thinking maybe we should start getting reviewed. Because before then it was like the Better Business Bureau.
Right.
Or Yelp, something like that.
So you just ask every client to give you a review, something like that, and then it starts kind of progressing over time?
Yeah, absolutely. I have the loan officers reach out to them and ask us to give us a a review on Google, and that helps out a lot. And we send them the link to make it easier on them, you know.
Right.
So, but yeah, it's helped out a lot.
That's awesome, man. That's
Yeah.
awesome. Darel, what does success mean to you?
I mean, I think you can pair something that you're good at and something that you enjoy.
Mm-hmm.
You're happy. Mm-hmm. I think that will make you happy. That's success. Obviously, you know, making money is at the end of the day, that's what it comes down to.
Yeah.
And I've been very blessed. You know, the industry's been good to me and been good to my family. I've been able to put my boys through college and do all the fun things and travel like you do and so forth. Yeah. And also have a big impact with my team members. You know, right. We talked about before, I love developing people. Yeah. I love when someone comes in, they're a little bit shy and they're, you know, they're smart, but they're just kind of quiet and not so sure of themselves, and watching them develop. And then all of a sudden they got this swagger to them. You can see them walking in the hallway and I'm like, I remember you. I remember when you started and you were very timid. And so I love that part of the business, you know, when you can develop people. So I think if you're like me and you can say you enjoy going to work on Monday and you're making good money doing it and able to support yourself and your family, that's a good sign of success.
Yeah. Yeah. Especially, I mean, you know, being responsible for the success of 14 people like you are, I think that's a huge undertaking. And I think it takes a lot of, or it says a lot about you as a leader, you know, to be able to guide those people on a daily basis. So
yeah, and you got to put them first. You know, I always put my team members first. Yeah. Never let them feel like, you know, we have an irate customer, you know, and I'm like, if someone like, you know, it's happened very rarely over the years, right? But one time we had some guy that was just cussing at one of my employees, and my employees are not allowed to be irate or yell at anybody. But I'm like, if somebody ever does that to you, you come get me, and I'll be that mama bear that comes in there and like, hey, buddy, you don't speak to my team that way. So they know I have their back, you know, 100%. And you know, again, that's happened I think one time, but I'm like, you know, sometimes people can get that way, you know. But I think your team members want to know that you believe in them and you have their back in case they do get in a bind, because you take care of them and they'll take care of you.
Yeah, absolutely. I couldn't agree more. What has been your biggest lesson that you've learned throughout the years, you know, being a business owner and being a leader in Nobel Mortgage? What has been some of the biggest key takeaways that you've gotten over the years?
You know, I think, you know, when times are good, you know, don't get too high. Business is slow, don't get too low.
Yeah.
And just try to stay consistent, you know, try to stay as consistent and persistent as you can. Every day, go to work, you know, work hard, you know, obviously take time off when you can, but you have to be consistent and persistent over the years, or else you just will not last, you know. And it's easy to rest on your laurels. The market is good, you know, like a lot of people have probably the last several years, because the market was just insane for a while.
Yeah.
But you know it's coming to an end.
Right.
You know the market's going to slow down, and it's slow right now.
Yeah.
You know, you know that's coming. So I've learned to be very like, okay, we're doing good right now, but let's not, you know, not pat ourselves on the back.
Yeah.
You know, let's be careful here. And then when the market's down, I got to do the opposite, right? I got to lift everybody up, you know, because we're not doing as much business or something like that. So, you know, try not to get too high, try not to get too low, and just be very consistent. Treat everybody with respect, and just do the right thing when it comes to your team members or your employees. I mean, or your customers. Obviously, take care of your customers. You know.
And when you say being consistent, what do you like specifically? What kind of tasks do you mean being consistent in?
I mean, showing up. You know, showing up is 80% of anything out there. You know, I'm very big on in person. You know, employees, on team members. We tried the whole remote thing during COVID, and I hated it.
That's tough.
I feel like you lose a lot. You know, you lose a lot with your culture.
Yeah.
You know, and I couldn't do it. Like I couldn't do it. There's no way. I need to be around people. And so I like my team members in the office. We have one guy that's remote, but he moved to another city. But, you know, showing up to work, you know, and showing up prepared and in the right mindset and with the right attitude on a daily basis, you know, and doing that over a long period of time. And again, in my case, over 22 years, that has a big part of my success, you know, but I enjoy it. You know, I enjoy that grind and coming in on Monday. And, you know, as you know, as a business owner, you never turn off.
No.
You know, I'll be at home and I'm sitting there and I'm gazing off, and my girlfriend will look at me and she's like, "What's wrong?" And I'm like, "I'm working out a situation in my head." You never turn off.
Right.
And she's like, "God, that sounds so stressful." And I'm like, no, it doesn't bother me, you know. And I worked from home the other day, and I was working and on the phone, this and that. And she was like, "Are you okay?" And I'm like, "Fine." She's like, So it sounds like you're having a really bad day. And I was like, this is just another day.
Yeah.
This is nothing.
This is what we do, baby.
I'm fine. What are we doing tonight, by the way? Let's go have dinner or something.
Right, right.
Yeah. So I like that. I like the fast pace,
Yeah. You've seen a lot of ups and downs in the market, right?
Yes.
So right now we're slow. We're kind of in a buyer's market right now. Where do you see the market going from here?
I think it's going to flip eventually. When I think if we can get, everybody's hanging their hat on interest rates, but interest rates are not that high. People are like acting like we're paying. When I first started in this industry, our primary residence was over 9%.
9%.
It was over 9% for a primary residence.
Shit.
And then, when they got into
what year was this?
This was in 1995.
95. Yeah, 9%.
95, 96.
Yeah.
And then they had started going down, and they got into the sevens, and people were ecstatic. And then if you got into the sixes, that's when you were the guy bragging at the party. I got a 6.25% interest rate. And that's very normal. If you look at the graph of where interest rates have always kind of been in that 5, 6, 7% range, more 6 or 7.
Yeah.
And so I don't think rates is necessarily the solution. I just think that we are on such a bull run for a long time. It felt like it needed to slow down after 2019, and then COVID hit. We did have that brief slowdown, but then it took off even more. Yeah. And, it's hard to hold those runs for too long. And so I think it was a necessary evil where people were just buying and spending, and the rates were so low. And then now the market slowed down, and everybody's terrified to get rid of their 2 or 3% rate. So I don't think people are buying unless they absolutely have to.
Right.
And so I think that'll change. I think the rates will come down in the next year. And by next spring, I don't think it'll start picking up. But there's still a little too much inventory right now. You don't have enough buyers in the market.
Yeah. So in terms of being able to see that flip, right? When do you think maybe we're going to have some sort of like another bull? Late next year, maybe 2027?
Yeah, I think, I'm hoping by maybe the second quarter or the third quarter of next year, I think I don't know if it'll be a bull run, but I think it'll change quite a bit. I think the rates by then will have dropped and start getting people that I think they're already starting to get a little more active right now, but I think people will start buying a little bit more.
Yeah.
Get some of that inventory flushed down and can get back to doing business. But I think it was almost necessary that it slowed down. It had to slow down.
We needed it. Yeah.
Yeah. I mean, since
sort of correction. Yeah.
I mean, since the Great Recession of 08 and 09, I don't think there's really been a real slow period that we've had that I can recall of.
Right.
And so
would you say this is kind of like the first kind of slow period since then?
Other than the Great Recession. I mean, we've had good years and okay years, but this, the last year and a half, you could see, there's been mortgage companies closing. There's been, I think, over 1 million realtors exited the industry.
Wow. I didn't know that figure.
Yeah. There's a lot of people that have just exited the industry in general.
Yeah.
And, you get that in this industry. It's very low barriers to entry. It's very profitable. So you get a lot of people that come into the industry when it's good and they pull out when it slows down.
Right.
I'm just I'm an old dog. I'm sticking to, this is all I know,
Yeah.
I'm like, some say diversify, don't put all your eggs in one basket.
Yeah.
I'm like, no, I'm all in. I'm all in. And I just watch my basket.
Yeah.
If you watch your basket, you'll be okay.
Yeah. You're going to take care of it.
But it's a great industry, and there's a lot of people that are the same like me that just get out for the long haul,
Yeah, absolutely. What do you think? So you mentioned, interest rates are not everything for why, we're in the economy that we're in right now, or the market that we're in. What other factors do you think are contributing to the slow economy right now?
I mean, I think it's several things. Obviously, we had a bull run for a long time. Inflation has certainly had an impact on people. You also have higher insurance premiums and higher taxes, and so people can't afford as much.
Yeah.
And so we're at that point now where a lot of people are like, I'm just going to rent for a little while longer because it makes more sense for them to rent. Insurance has gone through the roof.
Yeah.
And so has property taxes.
Right.
We talked about earlier. I started an insurance company 4 years ago.
Yeah.
And the way the premiums have gone up, and I don't see how they're going to come back down. That changes the whole
dynamic.
The whole dynamic of buying a house.
Right.
Before you were paying $2,000 for insurance, and now you're paying $5,000 for insurance.
It's gone up that much dramatically.
I mean, it depends on where you're at, obviously, right? But yeah, I mean, and especially on the commercial side, if you're buying, Class C apartments, we've had policies that went from 20,000 to 80,000 year over year. But these insurance companies
from 20 to 80K.
Yeah, think about what that does to your cash flow.
Oh yeah, it eliminates it.
Eliminates your cash flow, and the same thing with landlords. Landlords have had to pay higher insurance premiums. God forbid they're in a flood zone, or they're in Galveston or somewhere there where you need windstorm. I mean, that's a game changer in how profitable that property
What do you
is.
think is costing all the insurance premiums to go up so dramatically?
I mean, we've had so many.
Yeah.
Think about the storms we've had the last several years. We had that derecho that came out of nowhere.
Yeah.
Tons of damage. Right. We had Hurricane Beryl. We had that big freeze. And so a lot of these storms have stacked up on us the last 3-4 years. And, and insurance companies are nationwide, right? So then you look at the fires that happened in California, and then all the storms in Florida, especially those markets, those outer line markets. Yeah. These insurance companies have taken tons and tons of losses on it in Hawaii, Right. So now they got to recoup them. So they're going to raise everybody's premiums.
And so you really don't see the premiums coming down?
I haven't seen anything that points to a sign of relief when it comes to insurance premiums. I think it's really the new norm. I think some of that will settle down, but I think a lot of it is the new norm. And even on autos, I mean, auto insurance has gone up quite a bit. So all that affects people's ability to buy a house. And the reason auto insurance has gone up so much is because it's more expensive to repair these autos. These autos are like driving computers now.
Right.
It used to be they were very mechanical. You could take it in, you get something fixed. But now you have to have a dealer or someone who has a computer system to fix everything on these cars. Yeah. And it's incredibly expensive. So guess what? Insurance company is going to raise your premium. Yeah. Because a fender bender, 10 years ago, 20 years ago might have cost $1,500. Now it's like $8,000.
Yeah.
And so
for a fender bender.
Yeah, something minor because it has all these sensors on it, or whatever else it messed up on there. So that has a big impact on what it takes to fix things. And same thing on houses. You get damage on a house, it's a lot more expensive to repair a house than it ever was.
Yeah. And the insurance has gone up, the taxes have gone up, and so really the only thing that needs to give is the price, right? So that's why we're seeing all these buyers really have control whenever they're going out and shopping. They're able to make low offers. I really think right now, if anyone is shopping for a house, make that lower offer, right? Because sellers don't have a whole lot of options, and taxes being that high, insurance being that high, the only thing that needs to give is price. So
yeah. I did a video yesterday about this because a lot of houses are sitting on the market right now. Yeah. And one of the things that a lot of sellers are missing on, and a lot of agents are not aware of, is you can do what's called a buy down, a rate buy down, a temporary rate buy down.
Okay.
And so if you're a seller, and my example yesterday was if you have a $300,000 house, rather than lower the price 10%, which is $30,000, offer them a 2-1 buy down. So if you qualify for a 7% interest rate, me as the seller says, I'm going to contribute towards your interest rate. I'm going to give you a temporary rate buy down, a 2-1 buy down. The first year, your rate instead of 7 is going to be 5%. Second year is going to be 6%. And then it goes back up to 7. The lender gets all that money up front. The lender's happy as a clam. They're still making their money. Yeah. That only costs the seller $7,000.
Really?
So would you rather take a 10% reduction or $7,000? I'll take the $7,000.
Yeah.
And so, it's a benefit to the buyer. It helps them get into the house. Their rate goes down to 5% that first year. And then everybody's thinking is the rate's going to come down to around 5% in the next year anyway. And then they can refinance it. It's a great way to move houses. And a lot of people aren't doing that. I tell all my guys that are flipping, I'm like, you need to think about this if it's sitting on the market for longer than a couple of months.
Yeah. And so how do you recommend someone advertise that? Maybe like on the MLS whenever they go and list the property?
Yeah. The agent just needs to recommend it or put it on the MOS. The seller is offering, agent remarks. Seller is offering a 2-1 buy down, or you can even do a 3-1 buy down, and you'll be able to compute how much that cost is. Just stick it into Chat GPT, and it'll tell you it'll cost the seller this much money. Yeah. And again, $300,000 house, that's $7,000. Nothing.
Nothing. Yeah.
Nothing. It's less than 10%, less than 5%.
And it helps the buyer out tremendously.
Absolutely. And it's a win-win. So that may help you stick out more than the guy selling the house next to you that's giving you a bonus for buying new curtains or something.
Yeah. Wow, and it's so surprising how cheap it is to do that too.
Yeah. Because all you're doing is paying the difference in what the lender would earn in interest. And it's not that big of a difference from 7% to 2% over the course of a year, and then 7% to 6% course of the second year. It's not that much. Again, it's $7,000 over the course of 2 years. Yeah. And and also, it makes a really impact about how much interest rates don't really have that big of an impact. Yeah. It's more of mindset than anything. Yeah. I've got a buddy of mine that he lives in Katy, and he got a divorce, and he really wants to live in town now. And he's like, oh, I got this 3% interest rate. Yeah. And I was like, bro, you work in town. Your girlfriend lives in the Heights. You live in Katy. I'm like, just move over here. And he's like, no, I can't get rid of that 3% interest rate.
Oh my God.
And I'm like, so you're going to drive 30 miles every day.
Yeah.
So you don't lose your three. And he's like, yeah, I can't do it, man. I can't do it. And I'm like, okay.
Jeez, yeah.
Isn't that crazy?
I don't understand that at all. For me, quality of life is everything, you know. And
yes.
Yeah, driving an hour in traffic every day is not the quality of life that I choose.
Me neither.
No.
Like my whole world's about 5 miles.
Same. Yeah. You know? I live in the Heights. I'm not going anywhere, dude.
Yeah. Yeah, I like being in town.
Yeah. My gym now is walking distance. I can walk to it. I have a major shopping center right there. I have my dog. I take her walking all over the place, and I'm happy as a duck. It's great there.
There's definitely perks to living in town.
Yeah,
you know, and I get it from him. Like, he has kids and so forth, but his ex-wife lives in town too, and I'm like, come on. I'm like, and they go to school in town. I'm like, your whole world is over here.
Yeah.
You're 30 miles out.
You're over there.
Now I got that 3% interest rate, buddy. I can't get rid of it.
Yeah. You think you know me, you could just probably rent it out or something, or maybe even owner finance it, and then maybe, if they default, then you can take it back or whatever. But there's ways to still capitalize on that low interest rate.
Absolutely. Yeah. It's a limited mindset.
Yeah.
Hopefully he doesn't watch this show and see me call him out.
We're talking shit about him. So Darel, what makes you successful, man? I see you do a lot of these events and all this other stuff, but I think all of that is a result of something, right? So what is the cost of all of that? What makes you successful?
I mean, I've become really good at networking.
Yeah.
I think that's helped build my business. And when I started Nobel Mortgage, I was a little more introverted.
Yeah.
I wasn't a natural extrovert. I mean, once I got comfortable in a setting, yeah. I
really don't even see that at all, man.
I know.
Yeah.
If you meet people, and I'm very blessed that I have, like 4 buddies that I've known for 30 years.
Yeah.
And they will tell you you're a drastically different person than what you were.
Yeah.
And so, you always hear the saying, people can't change. And I'm here to say, yes, they can.
Yeah.
If you're motivated, when I started my business, I wasn't good at public speaking.
Mm-hmm.
If I wasn't the best at networking, I was a little more shy about it. And so I was like, I have a wife and 2 kids at home. I have to make this work.
Yeah.
And so I took public speaking classes, and I just forced myself to be uncomfortable and start networking and start attending a lot of events and doing public speaking and throwing events and just trying to be that rainmaker for the business. And that's what really helped build my business a lot. And I try to do that in a very authentic way. Mm-hmm. I don't believe showing up at an event and just handing out business cards is the way to do it. If I show up at an event and I make 3 good connections, and when I say connections, something I can do for you or something you can do for me, or vice versa, you have to approach it in a very authentic way.
Right.
Again, that abundance mentality, right?
Right.
I think that can, over the years, you get small results initially, but over the years that it magnifies because people will refer you business, and those people will refer you business. And at the end of the day, you have to get business to stay in business.
Right.
And so I've always been big on networking and going about it that way. I still try to attend a lot of events and just treat people right. Do the right thing. Again, show up at work, do the right thing, and just grind, man.
Yeah.
That's all you can do.
Yeah. I don't even remember the way that we met, dude. It just seems like over time you're here in Houston, you're doing business, and you just meet people, right?
Yeah. Well, it's a small circle on the investment side in real estate, and that's probably how I came to meet you. I think I originally met Boris, and then met you and all the other, broskies, Jonathan, and all that, and then we went to I went to Vegas with you guys a couple years ago. Yeah. That was wild, man.
That was a great time, man. Yeah.
I was like, holy cow, these guys are too young for me, man. I can't keep up with them.
You're the OG, man. You were out there, like you're just moving through the crowd, and I'm like, dang, I need to learn a couple tricks from Darel. Holy shit, I didn't know I could learn so much from him. Hey, what's up, Darel? I'm gonna hang out with you, bro.
That was a fun trip.
That was a great trip, man. That was one of the Boris specials, and he's like, let's do a champagne shower,
Yeah.
$20,000 later.
Oh yeah, I think our tab at the pool was like over 20 grand,
something like that.
Yeah, that was
something
crazy.
Absolutely ridiculous. Yeah.
Yeah.
But it was a great memory.
That was a great trip.
Great trip. But cool, man. I love this. So, let's fast forward now. Went through your story, went through how you started Noble. Fast forward now to today. What's next for Nobel Mortgage?
Right now we're really we're getting ready to move offices. We just signed a lease on a new space. We're excited about that. We're doing a custom build out and all that. So
Nice.
that's really good. Focusing on continuing to educate our team, really try to incorporate a lot more technology in our website and just our systems and so forth with the new age we're in with AI and automation and so forth. That's something I've been really focusing on the last year, just to make things more efficient.
Yeah.
The more efficient you can get, I think the better you are, and the more you can align with AI and everything else that it has to offer. I think that's kind of the new wave, right? So we're trying to spend a lot of time focusing on that and see how we can be really efficient. And I lean on my team members for that. Most of my team members are in their 30s or younger.
Yeah.
So they've been around this their whole life.
Right.
And so I always tell my team members whenever they start, look, come in here, we're going to teach you what we do, and I want you to just focus on that and master it. And after you master that, I want you, if you have an idea about something, how we can do things better or more efficient or take care of our customers, but I am all ears. I don't care if you're the person answering the phones or whoever.
Yeah.
And I listen to that.
Nice.
I don't always do what they say they're going to do. I'm like, I'm all ears, not saying we're going to do it, but I'm all ears. And, because every system we have at Noble, a team member has had a part in it. Either it was their idea or they made it better.
Nice.
So I think that's the big reason why I'm also successful. We've been able to stay in business so long is I lean on that. That younger generation, they're exposed to things that I wasn't exposed to, and I've learned so much from them. They can learn from me too, but I'm a big believer in learning from them.
I love that. How do you plan on incorporating artificial intelligence into your business?
I've just kind of started scratching the surface at that this year, but the first thing I'm looking at is how we can do it with our website, number one, and also how we can do it with our leads. How do we analyze our leads, looking at the data. I'm a big, the one side of my business that I still delegated, but I'm still very active in is the marketing side. I really much enjoy the marketing side. And what a lot of people don't realize is marketing at the end of the day comes down to data.
Right.
Because
that's it.
It's really all data, It's like, okay, you spent this much money. It's how many people called. It's how many people were actually qualified for you to even sell them something. And then how many people did your salespeople convert? How much money did you make?
Right. That's it.
And where did those leads come from? Did it work? Did you make money or lose money? You made money? Great. Do more of that. You lost money? Okay.
Don't do that.
Either don't do that or change it.
Adjust it.
Right? And you have to study the data. And I love that part of it. And that's the part where AI is going to help us out a lot.
Nice. What kind of marketing are you doing right now?
Any and everything, man. Any and everything. We're big on Google. We do Google AdWords. We have a company that manages all our SEO that we pay a lot of money to. And then we also sponsor a lot of events here in Houston. We went to all the local, gurus here in town that have, lifestyles, Total Wealth, all those guys. And 2 or 3 other ones. Plus we host events. And then we have a lot of referral partners, that refer as business and vice versa.
Nice. A really cool use case that I've seen for AI is a receptionist. And so what you do is you give it like a frequently asked questions website, and then you basically train it on all of the potential questions that maybe a borrower is going to have. And when you talk to them, it is crazy how eerily familiar it is to a human voice. It even pauses and then it says like it throws in filler words like and like. So AI is like I don't know about that, and it pauses.
That's really cool.
It's crazy, dude. It's gone a long way, and it's able to qualify the actual borrower that's calling in. It'll have full-blown conversations, and then it has a specific goal. So whether that's to schedule an in-person appointment with you or to maybe have them come into the office or fill out a form, whatever it is, it'll always revert back to that goal without losing, without going on it in a tangent or maybe getting lost in a conversation. It'll always just come back to like, okay, let me get your form, let me get your information, let me get
really
you into
cool.
It's pretty great, man.
We have one of our lending partners that we sell our long-term loans to. They use AI to do that. They'll follow up with customers and so forth using AI with a voice, and it's someone calling you. They called my son the other day. My son started working for me too. That's been really cool.
Nice.
My oldest son Silas, he graduated from A&M last year.
Nice.
And he wanted to come into the family business and as a loan officer. And I never pushed him into it, you know, but he wanted to, which was such a huge compliment, you know. Typically, you know, you don't want to work with your parents or something, right? But he wanted to, and that's such a joy having my son there every day.
I bet, man.
And he's kind of like me. He's like, you know, because I kind of checked in with him after 6 months, and I was like, "How's it going?" You know, because you don't like it, don't stay here because I'm your dad. Go do what makes you happy. And he's like, he said, "Dad, it just all kind of makes sense."
Yeah.
I said, "That's so funny you said that because that's how I felt."
Damn.
Isn't that funny?
Yeah, it is.
He has the same mind.
Apple doesn't fall too far from the tree.
Yeah, absolutely.
Yeah, that's great, man. I bet that's very fulfilling.
It is.
Yeah. Kind of knows you were successful not only as a business owner but also as a father.
Oh yeah, and my kids are everything. I love my two boys. You know, my other one's in Arkansas. He just went back, but very blessed that my kids actually enjoy spending time with me, and they enjoy spending time with their mom. You know, they truly do. Like for spring break last year, my youngest son, all his buddies went to Cabo, and he was like, "I just want to come home and hang out with you and Mom." And I'm like, "That's pretty awesome, man." You know, we go smoke cigars and drink whiskey, and now it's a different element now, but it's really nice.
Yeah, that's awesome, man. I think that's a good way to track success right there.
Yes, 100%. You know, you have to just keep them close to you, and you know, they're going to be, you know, little assholes for a while, you know, they go through that phase, but you just got to pick your battles with them. And, you know, I think what really helped with them is they both interned with me over the summer a couple times, and it allowed them to see me in a different light. And they were like, "Man, Dad, you got some shit going on here, don't you?"
Yeah, you're actually a badass. Nice.
Yeah, you got a lot of pressure on you. You're handling a lot of stuff, and you know, you're dealing with all this stuff, and then you take us to lunch like nothing. You're like happy, and and they're thinking like, "How are you still happy after all that?" I'm like, "That's just another day, buddy."
Yeah,
that's what I do here. You know, you can't let it ruin your day.
That's what we do. That's what we do.
That was really helpful.
That's awesome, man. Well, dude, this has been a great time. If someone wants to do business with you, how can they find out more about, you know, Darel Dyke, Nobel Mortgage? How can they get a hold of your company?
Yeah, absolutely. Of course, you can go to our website, nobelmortgage.com. They could call us at 713-680-8100. And if they want to send me an email, it's just Darel, D-A-R. I'm sorry, I'm thinking of my legacy in email. It's ddyke, D-D-A-I-K at Nobel Mortgage, or send it to info@Nobel Mortgage. I'm not hard to find. Just Google me or find me on social media. I'm very active on social media as well.
Yeah. Do you answer DMs too?
Absolutely.
Yeah.
I get a lot of leads from DMs. And you know where I'm starting to get leads from right now is ChatGPT.
ChatGPT.
I've had like 5 or 6 loans that people have called in, and we always ask, "How'd you hear about us?" And they said, ChatGPT.
Wait, what?
Yeah, because if you put in...
So ChatGPT recommended you to someone that was searching, you know, hard money lender in Houston.
Yeah, because I actually looked it up myself. I was like, wait a minute. So I went into ChatGPT.
What did you search?
And I said, "Who's the best hard money lender in Houston?" We did a marketing piece out of it.
Really?
Yeah, because I saw it and I was like, we got to make this a marketing piece.
That's hilarious, dude.
And it listed a couple.
You got to run ads on that.
Yeah, we did that. And it's like Nobel Mortgage has been known to buy, because they go and they check and they look at your reviews, right? And we have outstanding reviews. Yeah. You know, again, over 500, 5-star reviews from Google. So
yeah, I bet a lot of lenders out there don't have that many reviews.
Yeah, probably not.
Yeah,
probably not.
That's probably why you rank pretty high on there.
Yeah. So that's that's really cool, isn't it?
Wow, yeah, it is. Yeah. So now you gotta check out how to rank on the other AI platforms like Grok, Elon Musk's AI, and then Gemini.
Yes,
Gemini, that's Google's.
Yeah,
AI.
I haven't messed with those. I always go to ChatGPT, but I need to start messing with those.
Yeah. More leads,
Yeah, absolutely.
Yeah,
absolutely.
Well, thank you so much for coming on and doing this podcast with me. Is there anything else that you might want to add here at the end?
I mean, just thanks for having me on, Josue. I consider you a friend, and you have a lot of integrity, and proud to see you grow and thrive in what you're doing and so forth. I know you've done some real estate, and now you're doing a lot of other things with Vancom, so I appreciate you having me on.
Absolutely, man. Thank you so much for being here.
Absolutely.